In the beginning, before coins, before wallets, before someone invented, buy one, get one free, humans traded stuff. A spear for a basket of berries, a shiny rock for a nice fur coat. It was all about bartering. No taxes, no receipts, just you, your goods, and the hope the other person didn't try to trade you a broken spear. As tribes grew, bartering got messy. You can't exactly cut a goat in half to pay for half a loaf of bread. So humans invented the first money. Shells, shiny stones, and rare metals. Suddenly, value could fit in your pocket. Stickman loved it except when he dropped it in the river. Fast forward to ancient civilizations. Egypt, Mesopotamia, China. Money became official. Coins with kings' faces, early banking systems, even taxes. Stickman discovered that if you owed the pharaoh money, you paid, or you built a pyramid. Suddenly, saving became a matter of survival. Then came the Middle Ages. Knights fought battles, peasants farmed, and gold coins clinked in leather pouches. Stickman tried becoming a medieval banker, but realized lending money to knights was risky, especially when they paid you back in chickens instead of coins. The Renaissance brought art, science, and richer merchants. Banking families like the Medicis were the financial influencers of their day. Stickman opened his first merchant account, which was just a lockbox under his bed. But hey, interest rates were zero and security was, well, questionable. Then, boom, the Industrial Revolution. Factories, railroads, machines. Money started moving faster than ever. Workers got paid in actual wages, not wheat. Stickman got his first paycheck and immediately spent it on a fancy hat. Financial literacy, still under construction. The 1800s brought paper money into the spotlight. Lighter than coins, easier to carry, and easier to accidentally wash in your pants. Stickman learned that inflation was a thing when his favorite loaf of bread suddenly cost 2 bills instead of 1. Why? He asked. The baker just shrugged. Banks became powerful, giving loans for homes, businesses, and occasionally terrible ideas. Stickman borrowed to start a self-winding spoon business. Spoiler, it failed. Debt became a real part of everyday life, and interest was no longer a nice thing you showed at parties. By the early 1900s, people were buying cars, radios, and homes on credit. Stickman signed up for his first installment plan, not realizing he'd still be paying for that sofa years after it went out of style. Lesson learned, just because you can buy now doesn't mean you should. Then came the Great Depression. Jobs vanished, banks collapsed, and Stickman's piggy bank became his only bank. He learned to stretch every coin, trade skills instead of money, and appreciate the fine dining experience of just bread and water. World War II brought rationing and war bonds. Stickman planted a victory garden and bought bonds to support the troops. Money wasn't just for spending. It became a symbol of trust in the future, and occasionally an excuse to eat suspicious powdered eggs. Post-war boom time? The 1950s brought steady jobs, affordable homes, and shiny new gadgets. Stickman got a TV, a fridge, and a mortgage. Banks loved him, advertisers loved him, and his wallet, well, his wallet tried to keep up. The 1960s and 70s introduced credit cards. No more carrying cash! Stickman swiped for everything from bell bottoms to disco lights. It felt like free money, until the bill arrived, and then another, and another. The hangover was financial, not from the disco. In the 1980s, the stock market became a household topic. Stickman bought shares, felt rich when they went up, and cried when they went down. Finance was now not just about earning. It was about investing, risk-taking, and sometimes panicking. The 1990s brought the internet. Online banking appeared. Stickman sent money without leaving the couch, accidentally buying a suspicious magic money-making course from an equally suspicious website. Digital scams were born. The 2000s gave us smartphones, online shopping, and financial apps. Stickman could now track his budget in real time. If only he remembered to open the app instead of buying more gadgets. Convenience made spending easier than ever. Then came the 2008 financial crisis. Stickman learned the hard way that housing bubbles pop, banks can fail, and having all your eggs in one basket is, well, risky. He vowed to diversify, not just in investments, but in breakfast choices. The 2010s brought the gig economy and side hustles. Stickman drove cars, delivered food, and sold art online. Earning money became flexible, but so did job security, retirement savings, a work in progress. And now, in the AI era, Stickman watches algorithms manage investments, chatbots explain taxes, and robots serve coffee. Money moves faster than ever, and financial skills are as important as learning to read. The rules change, but one thing stays the same. How you use your money shapes your life. Looking back, from trading goats to trading cryptocurrency, Stickman's journey shows that while money's form changes, its role in our lives doesn't. It's not just about wealth. It's about survival, opportunity, and the endless human dance between saving and spending. Long, long ago, before coins or cash, Stickman was just a caveman with a club and a dream. His bank account was a pile of rocks. His transactions were trading fish for firewood. The system worked until someone tried to pay him with a stick. That's when Stickman invented the first refund policy: no sticks accepted. Barter was great until Stickman wanted something small, like half a loaf of bread, but only had a giant goat. Cutting it in half, not ideal, so humans invented early money shells, stones, shiny metals. Stickman loved it, but sometimes lost his wallet in the river. Nature's ATM was not very forgiving. Ancient civilizations got fancy. Coins stamped with kings' faces, early banks' taxes. Stickman learned quickly that taxes meant the king taking a slice of your bread, your coins, and possibly your lunch. Financial planning back then was basically hide your gold. In medieval times, coins clinked in pouches, peasants farmed, and knights borrowed money to buy armor. Stickman became a banker until he realized knights often forgot to repay because they were too busy fighting dragons. His collection policy: dodge sword, ask nicely, repeat. The Renaissance brought art, science, and rich merchants. Stickman tried investing in new technology, a flying machine powered by goats. It didn't work, but he did learn about risk and return. Mostly risk. Industrial Revolution time. Steam machines and factories. Stickman got his first job punching metal sheets for 12 hours a day. He got paid in actual money instead of onions. His financial strategy: spend it all on tea and biscuits, because savings accounts weren't a thing yet. Paper money took over the 1800s. Lightweight, easy to carry, and a nightmare when washed in the laundry. Stickman learned inflation when bread doubled in price overnight. Why? He asked. Because it can, replied the baker. Banks became powerful, offering loans for homes, businesses, and terrible ideas. Stickman borrowed to start a hat for cats business. The cats hated it. The debt did not. By the early 1900s, buying on credit was normal. Stickman bought a sofa on an installment plan and paid for it until the cushions disintegrated. That's when he invented the phrase, "Maybe I didn't need this." Then came the Great Depression. Jobs vanished, banks failed, and Stickman's dinner was just bread, sometimes without butter. He became a budgeting master, turning one potato into 3 meals and learning that free entertainment was staring at clouds. World War II meant rationing and war bonds. Stickman grew his own vegetables and supported the war effort. He also discovered powdered eggs, which he swore never to eat again, unless absolutely broke. The 1950s boomed with jobs, cars, and refrigerators. Stickman got a mortgage and a black and white TV. Life was good, except every commercial convinced him he needed another shiny appliance. In the 60s and 70s, credit cards appeared. Stickman swiped for disco outfits, vinyl records, and fondue sets. It felt magical until the bill came. That's when he realized plastic money is still money. The 1980s brought stock market mania. Stickman invested in the next big thing and made a fortune for about 3 weeks. Then it crashed. He learned that investing is like surfing. You can ride the wave, but sometimes you wipe out. The 90s brought the internet and online banking. Stickman sent money across the world without leaving home. Unfortunately, he also bought a guaranteed millionaire guide from a guy named Steve in his basement. The 2000s meant smartphones, online shopping, and instant payments. Stickman could now buy things in bed at 3 a.m. This was convenient for companies, less so for his savings. The 2008 crisis hit hard. Housing markets collapsed, banks panicked, and Stickman's dream of a beach house turned into a dream of keeping the lights on. He learned the word recession the hard way. The 2010s were the gig economy. Stickman drove cars, delivered food, sold handmade socks online. Money came from everywhere, but so did expenses. Retirement savings. That was future Stickman's problem. And now, in the AI era, Stickman watches robots make coffee, algorithms invest his money, and chatbots explain taxes. The speed of money is faster than ever. But so are mistakes. He's learned that no matter the era, one rule stands: spend wisely, save often, and maybe avoid goat-powered flying machines. From stone trading to cryptocurrency, Stickman's journey proves money changes shape, but people don't. We still chase it, lose it, save it, and sometimes blow it on ridiculous hats. And that's the story of everyday finances so far.